Hey, folks, and welcome to the Rate Update live version of YouTube. I am here with Nico Grammarosa, my sidekick for the night. What we're going to talk about today is VA mortgages, and I usually try to just bring you up to date on where the markets went since the last video we did. Main reason is we're just waiting for people to join us. Give everybody about 3, 4, 5 minutes to join us. So let's give a recap of what's going on in the markets. Today, I just posted some encouraging information later in the day. A lot of investors are starting to, well, I'll say it this way, stopping buying properties. So that may make a lot of people happy that are out there saying, hey, corporate America and these big landlords are buying up all the market. But just give you some context in there. They have a 26% of the market share, large corporations buying property. Now they went down all the way down to 20. It's still a substantial amount, but it's not as much as we thought. In the market too, the news this week, the MBS market's all over the map. And rates are, one day rates are up, right? It's kind of like the stock market. I'll put it that way. One day, rates are up 0.25%. The next day they're down 0.25%. And the other day I posted, this was weird. And I posted, hey, rates went lower today. And I had somebody just blast me on YouTube saying, this is BS and blah, blah, blah. It's like, dude, they're down from where they were yesterday. I'm not saying they're down, to the lowest levels in history. But so that's the markets are basically kind of bouncing around. One update I want to give everybody, and then we'll also post this if you got once we go through the VA programs and requirements and guidelines. Start posting your questions and let us know if you have questions. Last week's event, we talked about rate locks and how long a duration you can do that. We have an update on that later after the VA presentation. And, we're basically looking at a 6-month rate locks at this point because we have lenders that are actually backing out and not validating anything over 6 months. So if we already had you locked in for an extended period, exceeding 6 months, don't worry, we're okay. But if you're trying to get that now, it's really, really, really difficult. Mr. Rogers Neighborhoods. You got to call me because we got to figure out who you are. I don't know if I know you or not, so don't put your name on here. But send me an email if you would at dan.frio@gmail.com. I'd love to know who you are, or if you're just a follower, which I greatly appreciate. So let's get on to what today's topic is. So I'm going to move me and Nico to the side a little bit. And I think it was that one that we liked. And today we're going to talk about VA requirements. Here's how I come up with a lot of the context or the subject matters that we have is I walk around the office every week and I just, hey, what's a hot topic? What are you guys getting calls on? What's the most questions that you guys have on a weekly basis? And for the past 2 weeks, it's been VA. So I did some research even online with YouTube and algorithms and everything else. And it is a huge subject. So we just want to clarify what's a VA loan? When would you do it? If you're a realtor out there, I want to also explain they're not bad loans and you should help the veterans get into these homes. So basically, let's start from square one. All right. So VA mortgage, what is it? Well, if you're a veteran, you probably know if you have the benefits or not. If you don't, basically the best way to find out is, let me go to the screen over here. Sorry, I got 12 screens going on right now. You can go to www.va.gov/housing. I'll post, this is a PowerPoint presentation. I'll try to share it with you guys down below. But tomorrow, I promise I'll get it online because I can convert that to a link and then add that down below. So VA programs, what is it? Well, normally the primary reason that you would look at getting a VA mortgage is you're a veteran. You earned it. I didn't say you deserve it. I said you earned it, and hopefully you deserved it. And I didn't mean that in a bad way. So the benefits there is you have no money down. You can do 100% financing, and you can do 100% financing now cash out again. So if you're completely buried in debt and you're like, hey, I want to see my scenarios on what I can do maybe to get myself out of a lot of this debt. That's one way. But VA did come back, or we have programs with the VA now that will allow you to go back up to 100% financing, even with cash out. And they took that off the table for quite some time. But most of the time when we look at doing a VA mortgage is when somebody isn't putting down 20%, okay? And or if they don't have, I won't say great credit, but if you don't have basically a 640, 650 credit score, and you're not putting down 20%, a government-sponsored program such as VA, FHA, and USDA is the way to go, okay? So Normally, if you're a veteran and you never used your VA benefits, I would highly suggest you do it. And it's your prerogative on how much you want to put down, but you don't have to put down anything. Okay. VA does charge you a fee. However, if you're disabled, VA waives that fee. And I think the disability has to be, I think, 70% or more. Also, if you're disabled and you might not know this, most states will exempt you from having to pay real estate taxes, believe it or not. So most of the country, if you're buying an average home these days, you're probably looking at 3,000-4,000 in real estate taxes. So think that could save you $300 to $400 a month. Okay, so that's just one little tidbit there. Another reason why you might consider or be, I won't say forced into going with a VA loan, is your bankruptcy terms are less than normal conventional financing. So if you have a Chapter 7, you had a Chapter 7 bankruptcy, you only have to wait 2 years. If you had a Chapter 13, you paid as agreed, you can wait a year. Sometimes you can even, if you're in a Chapter 13 and you've been in it for 3 years, if you get the trustees' approval, you can even do a VA mortgage, if you've been in a Chapter 13 for 3 years or more. The next thing is foreclosure. Now, this was a big issue or assistance for us back in about 2010 through 12, when a lot of people were losing their homes, either short sale or foreclosures or whatever. So this was a good assistance program for a lot of those out there that had or struggled back in 2006, 2008. Here's the loan to values. When we talk LTV, LTV means loan to value. So basically think of it as the loan amount divided by the value of the home. So if your loan amount's 100 and the value is 100, then your loan to value is 100. So you can go up to 100% loan to value. Okay. And you can even add in the funding fee that VA charges you. For cash out refinances, you can go down to, even on purchases, you can go down to a 500 credit score. Okay. So this is intriguing. And this just came up recently. VA will now allow you to have a 500 credit score, but you have to be approvable. You can't have just completely terrible credit, but you would need 10% down. There is no other program out there that's going to do basically that loan for you. Once you hit 580 and above, that is when you can get 100% financing. Okay. And again, if you've had any disabilities, there might be a lot of perks in here for you. So God bless you. Check in. We can even help you check in to see what you qualify for.
Hey, Dan, can I chime in real quick?
Yes, sir.
Let's go back one page real quick.
Okay.
One thing that also came out this year are the purchase limits, right?
Oh, yes. That's huge. Good call.
Come on. I'm going to let you take it from there, but I wanted to give it to you. Come on.
So in other words, VA dropped their loan limits. So if you want to buy a $3 million home, you can finance basically 100% of that loan. So that is one caveat that most people do not realize. Back just 2-3 years ago, they had loan limits such as FHA that they'll only finance up to a certain amount. Maybe it's 300 or 400,000 or something like that. VA dropped all of that. Now you can basically do a jumbo mortgage at 100% financing using your VA benefits. Guys, if I get laggy at all, I apologize. For some reason, I cannot log in my Wi-Fi at home, so I'm connected by my phone. So if there's any delays here or stutterings or something, I apologize. I'm doing the best I can, but I'm surprised it's working this well. But yeah, so there's no loan limits, meaning you can finance whatever you need on that, up to 100%, believe it or not. So if you're looking for a jumbo loan and you want a jumbo loan with no money down, that's your program. Great call, man. Another reason why you might go VA versus any other program is they're what they call the debt ratio. So you can see it says DTI ratios, manual underwrite 50, AUS basically unlimited or whatever it'll prove it for. So let me put this in English for you. DTI means debt to income, just like LTV, but this is debt to income. So your debt is basically everything on your credit report plus your proposed mortgage payment. Plus, there might be some other things, such as if you have a bankruptcy payment, if you're in a Chapter 13, You have child support, alimony, things like that that are mandated by law. Basically, we would throw that into your debts. What's not included in there is things such as your car insurance and your cell phone bill and your cable bill and your water bill, basically anything and everything that's on your credit report. I'll put it that way. And then you divide that by your monthly gross income. Your gross income is basically your income prior to all the taxes and the Medicare and the insurances and all that coming out. It is basically what you earned, would have taken home if everybody wouldn't have taken half your paycheck from you. So that being that. So when you do a manual underwrite, basically the manual underwrite is there when you have a less than a 580 credit score, or when we run your loan through the computer, it comes back and says, we don't like this loan. So what happens with your loan is you apply with us, we pull your credit, we plug in everything into the computer. It's a mortgage system software, and we upload it into Fannie Mae and Freddie Mac. They're the two entities that we talk about often that everybody uses. We use the same system as everybody. Doesn't matter if you're calling me, Citibank, Wells Fargo, Guaranteed Rate, whomever, Quicken Loans, we all use the same system. So that's what I would say. If they got you approved, I'll get you approved because it's the same system, okay? Unless they committed fraud or did something. But again, you gotta remember, crap in, crap out. So a lot of times people have discrepancies or issues with the automated systems because you might not know exactly what your income is. Do you know how much you would use as your monthly income that you would qualify for? If you do, you've probably been in the mortgage business. If you haven't been in the mortgage business, you probably don't, and you wouldn't do it correctly. I'm not downplaying that. I'm just saying, again, you put that information into the system, it might approve it, but then when we get your income, you didn't really make what you thought you made. So when we put that in there, then your loan might not qualify. So that's where a manual underwrite comes in, okay? But if they do a manual underwrite, we actually send it to a VA underwriter, and they'll review it. They'll allow up to a 50% debt ratio, okay? But if it approves it through Fannie Mae or Freddie Mac's automated system, we've gotten DTIs up to 60% approved and closed. Now, you might go out there and say, that's ridiculous or whatever. Guys, I don't make the rules. I'm just telling you, this is what VA allows. So if you have a problem with that, please call the VA. They're more than welcome to take your phone call if you can get through. The next thing is, I'm trying to get around my things. DD 214, certificate of eligibility. These are things if you're a veteran, you probably know or have or know where to find it or who to call. If you don't, the reference we can give you back through is just going back to www.va.gov, and that'll launch it. And then you can find in all their information where you need to be directed to. Let's go to the next thing is pros, 100% loan to value. Basically, no other program other than USDA will do that loan. No mortgage insurance, none. That could save you hundreds of dollars a month, okay? Lower rates, they're usually, if you compare apples to apples, if you have like a 650 credit score, what it would be versus for a conventional, an FHA or a VA. Well, FHA and VA is probably going to have the lower score, and then we'll route you over to VA because FHA has PMI. No matter if you put 50% down, you have to pay PMI with FHA, or VA doesn't. And then shorter durations of time from when you file bankruptcy and foreclosures in there. The cons are there's a funding fee. I don't get that, guys. It goes directly to the VA. So it depends. What you have to watch for is the multiple use piece. And let me just give you this. If you're looking to refinance a VA loan, unless you're going to 100% loan to value, and have not a great credit score, will probably look at a conventional loan. The reason why is VA in some instances will charge you 3.3% of the loan amount. Think about it. If it's a $500,000 loan, you're going to pay about $18,000 to the VA. I don't get it. And again, I don't get that money. The bank doesn't get that money. The lender doesn't get that money. The broker doesn't get that money. It goes to VA. Okay. Why that fee is so high, I don't know. And I think it's not good, but it is what it is. No investment or vacation homes. Appraisal inspections always required. not as desirable to sellers, which I don't know why. And I think I might know why here, and I'll tell you in a second. Well, let's address that. On a conventional loan, the appraiser, when they go out there, they do a good job, but there's a lot of things they don't have to do. For example, like if you're doing a VA or a FHA loan, the appraiser has to do what's called a head and shoulders in your attic, meaning they have to go up to here in your attic and look around. They don't have to walk around, but they have to do a head and shoulders inspection. That might show mold in the attic, might show mold on the roof. It might show issues. They also go around, make sure you have GFIs, those little things by your faucets in the bathroom where they'll pop instead of shocking you, the plug. Same thing in the kitchen. They go around and see if you have CO2 detectors or whatever they're called, and fire alarm, smoke detectors, and all those things. Conventional appraisers a lot of times don't do that. So if your seller is really against the VA, the first thing as a realtor I'd ask is why? And then the next thing is, are they trying to hide something? Okay, so that's the only thing I would ask there. But the other thing is, and this is the same thing with FHA, be careful when you buy a condo. Basically, it's just condos, okay? The condo association has to be approved. It has to be FHA approved. Now, it's FHA/VA, so it has to be approved. And probably half of the places are not. So you got to be really careful when you're going out there. Let's say we do a pre-approval for you, and then you go out there to put a bid on a place. Make sure, and don't just take your realtor's word for it. Make sure you find out the association's name, and then you're more than welcome to call us, email us with that information, and we'll find out for you if that place it has the FHA certificate, and then you can proceed. Because if not, you can't get it. It won't go through. Some people say we can do a spot condo or whatever. Yeah, you can. Those are really, really time consuming, and your seller's probably not going to wait or want to wait that whole duration of time to get that inspection done. So, questions. That's why we're here. That's basically the FHA,
Also,
or I'm sorry, the VA presentation that we have for you. Yes, sir.
Yeah, and real quick too, also like for the not as desirable to sellers, I've honestly never seen like someone come back for a VA. Definitely on FHA, I'll see people come like, man, I don't know, the seller's not going to like it. But for VA things, I've never really seen too much kickback. I definitely see the appraisal issue, but in recent days, I don't see too much kickback on the VA side.
Got it. Cool. So, guys, start asking your questions. You can ask VA questions. Or like I said, last week we had, it was how to lock a loan in the extended lock program. We were on here for 2 hours, I think. Fantastic. So participation is basically required. You'd say it that way, but that's why we do this, is to answer any and all the questions that you guys have. Otherwise, you can shoot me an email. So we like to do it in this format and kind of go from there. So Mr. Rogers, you just got, there he is, my man.
Yep, we got him.
So, okay.
So VA is based on residual income. Dan, go ahead.
Yeah. So there is a residual income factor. What residual? I don't mean to be screaming. I hope I'm not screaming. There is a residual income factor. I've really never seen it come into play, honestly. What residual income is basically is your, and I don't know. I know. J91. I don't know if you know, no funding fee with a 10% disability rate. Thank you, Jay. I don't know if you're a veteran. If you're a veteran, God bless you. You might be a girl. Jay, no funding fee. Jay, I'm not sure if you're maybe an underwriter, a realtor, or whatever, but yes, keep posting the questions. We love the participation. So what residual income is or means is how much money's left after you pay your bills. So let's say, for example, you make $5,000 a month and your bills are $2,000 a month. Well, your residual income is $3,000. So that's one of the things that they look at, and that was great feedback, Jay. Is, you might think, well, a 50 or 60% debt ratio is really high. Well, I mean, we do loans for people that some people make like $200,000 a month. And I'm not kidding you. I've seen them. I've seen the taxes. I've seen the bank statements. I mean, there's a lot of people out there make substantial amounts of money. But let's just say you make $200,000 a month or $200,000 a year. It's $20,000. at a 50% debt ratio, you would still have 10,000 left over. But okay, let's say it's net. So you make 8 of the 10, and you're at a 50 debt ratio. So you're at 5. You still have 3 or 4,000. So that's what they have all these figures, and you got to remember they've done this for a long time. So they know what fits and what doesn't fit. An example of some of this is when I started in the business, I was basically a collector. And the reason why they do that, I hated it, because you're calling people all day long, and it was little collections. I was calling people who owed money for a radio. And that's how they teach you the lending business. What they're teaching you is who not to lend to. There's patterns which you look for. And it is an eye-opener, believe it or not. I couldn't stand it. It was the worst job ever. I would have rather just shoveled garbage or dog poop, but I learned a lot. So thank you.
All
You
right,
want that one?
cool. Oh, guys, quick question. How far can I lock out a rate? So great question, especially right now in today's market. Honestly, most of our calls right now are for extended rates and how long we can lock them. Guys, we have options that can go up to a year. But we're honest guys, and we're 100% with all of our followers and all of our customers that we reach out to. Right now, the best option we have is a 180-day lock period. Anything above that, you're going to have fees, and the interest rate, it's not there to a point where we don't think rates will get there. Am I correct, Dan?
Yeah. So just some feedback off of that. Right now, what the banks are doing is, and guys, you got to remember, we scan the country over 130 lenders. So when we come back and say, there's nothing out there, there's really nothing out there. You might find a small little credit union or small little bank that might do it, but the masses out there are not doing it. So what they're doing now is if you go over 180 days, you're going to need to put up front about 2.5 points. Okay. That's a lot of money, and that's a huge fee. My thought behind it is, well, instead of you doing that is just a precaution or whatever, and who knows what's going to happen. I don't expect rates to go up that much more, that even if they go up some, you could buy the rate down lower to where you can lock it in now with that 2.5 points, if that makes sense. So we're not a proponent right now of going over 180 days because of what the lenders are doing at this point. So I'm just being transparent. We do have it, but it's not good. Okay, I'll leave it at that.
Call in. I can show you exactly what it looks like. I'll show you the 180-day, and I'll show you what the, if you need longer than that, what it looks like, and I'll be able to explain you why Dan is saying that. So just to pop off what you're saying.
Got it.
All right. Question: are there VA lenders who give land loans and new construction loans?
So the land loans, no. There's a new program out there, and we're still trying to wrap our head around it. So thanks, Kelsey, for joining us, and thanks for chiming in, because without you guys asking questions, everything's a moot point. But there are what they call the one close loans, and it's really hard. We tried to do some of them. And it's so in detail that's, ours is more of assembly. I'm just being transparent. We have an assembly line. So we would like to get you, on and off that assembly line as quick as we can. So what I can do is, Kelsey, if you don't mind, if you would email me, let me find and see if one of our lenders has the one closed loan. And we can help if the program is out there, we can help you with it. But I might refer you to somebody that might have a better platform for that. So if you don't mind emailing me, or even Nico, my email is pretty simple. It's Dan, DAN, at therateupdate.com. So if you wouldn't mind just emailing me, I'll get back with you and say, we can offer you. But I know I've done this for 30 years. I know a lot of people in the industry. So if you're having a tough time finding that program, I can reach out to my network and see if I can hook you up with somebody that could help you. But thank you so much for the post, and thanks for joining us tonight. Anything else down there?
Not at the moment.
Come on, guys. We got like 20 or 30 people on here right now. We need some questions. Okay, let's get off the VA subject. If you guys don't have VA questions, last week we had one of the talks I did, I think it was last week, was extended locks.
Yes, or you did the lock and shop, I think.
Yeah, lock and shop. We had, I think at last count that I had on Friday, we had 16 applications for that lock and shop. So let me just go over some rate locks. Here's where most people were having problems right now. And this is, I can guarantee, and Nico could probably fill in the blanks when we start talking about this. What's happening is tons of people are building homes. I mean, more than I even thought or anticipated. And a lot of them are going through the preferred lenders, and almost all the preferred lenders are coming back saying, we can't lock you until you're 30 or 45 days from closing. Well, we have a lot of people that are still calling in saying, I mean, at this point, I don't care that they're giving me $3,000 or $4,000 in credits because I just want to lock in and be done. Many of these people are like 2-3 months away, which I am a huge proponent of locking in now. Okay, so we can lock you into up to 180 days. There's no cost to you guys up front. So meaning, here's the biggest perk of this, and I'll just be blunt and say it. We're a broker. So basically, you hire me to go out in the country and find you the best program, the best rate, the perfect program with the least amount of fees. Okay, how do I make money? Well, the bank, I have referral programs or with these banks. I have a system it's a referral base basically, and they pay me a percentage of the loan amount back as a fee, basically a finder's fee and a processing fee. I educated the borrower. The borrower called me. We assisted them through the process. We took the application, pulled credit, and did all this stuff. So then we go to the bank and say, Mr. Bank, I got a perfect loan for you. You want it? Okay, perfect. And then they pay me a referral fee, but I'm your conduit that whole time. So what I'm getting at is, let's say we lock you in today on the 180-day lock. Let's just say the economy just goes to shit. Okay, sorry for my language. And in 30 days before we're ready to close, the rates are now 3%. All I'm going to do, I'm not going to even really, it's going to be seamless to you. I'm going to pick up your loan and just take everything that I just explained to you, and I'm going to go to it. I'm going to renegotiate with that lender and say, hey, rates today are 3%. I know we're locked in, but you got to do something with me, or I just won't close the thing because you don't have any skin in the game, and I have your whole complete file that I can really take your loan anywhere and get it done. So if they don't negotiate with us, we just go like this, and we go to another lender and put it down there that has the better rate at that point, and we get you through the system. So there's really nothing to lose other than 5 minutes putting in the application and 5 minutes sending us all your paperwork. That's about it. So that is, I can't explain it anymore. If everybody's out there freaking out because the rates are going up and up and up, that's it. The other thing we have, if you're out there actively looking for a house, we can lock you in. Okay. What's happening in a couple of weeks, the Federal Reserve is going to meet again. Well, what happened the last 2 times they met? Well, rates in January were 3. Rates today are 5.5. So you know the answer to that question. So we can lock you in today. And there is, I think, 1 or 2 lenders now. We can get several lenders that'll go up to 90 days. We have a few lenders right now in the country that are offering 180-day lock-in, what we call lock-in shops. We can lock you in now while you shop, as long as you close and fund within that duration of time. So I can't help you anymore with protecting yourself. We're trying to protect yourself with rates because we have the lock and shop for if you're trying to find an existing home, or if you're building a home, we have a 6-month lock there. Okay. So some of the times too, with the 6-month lock, if you're out, 6.5 months or something like that, I would suggest we lock you on the 180-day. And then when we get closer to that duration, we'll try to negotiate with the lender to give us maybe a week or 2 free extensions. But even if there's a cost involved, at least it gives you the mindset that you get locked in, rate never changed, and you might have had to pay a small fee, but you did end up closing at that rate that you qualified for. So that's that. Okay, sorry, that was long-winded. You might want to take one of these questions because I know.
Yeah, no, all good. So next question: is it possible to get VA loans with a credit score of 500 to 525?
You betcha. Let me put that back on the screen.
Yes,
Great
sir.
question. And here is the credit scores. Hold on, let me find it for you. Right? Nope, that's not it.
And Dan, while you're finding it, Manish, of course, it definitely is. Are you going to get the best interest rate? No. So here's what I would ask you. How soon are you trying to move in? How soon are you trying to get a new place? If it's a couple months out, what can we do to help you get that score above 600 or anything above to where you're at to help you get a better interest rate? So yes, it can get done. Rate's not going to be as good. So again, when are you trying to buy so we can help you fix that score maybe?
What I would say too is we have our credit bureau system. So this is it. So basically scratch out the cash out. You can go 580 or 500 to 580 with 10% down. Okay. But what we can help you with is there's two different things that we have. So when we pull your credit, our credit bureau comes back and says this. It says, here's your TransUnion score, here's your Equifax score, here's your Experience score. Underneath it, it's going to give us a number, and that number is going to say maybe like plus 18 or plus 12 or plus 10. That means if we did something with your credit, we can pick up that amount of points. So let me recap. Let's say you're at a 550 and we pull your credit and there's a plus 20 down there. We know if we do a little bit of work, we can get you a 570 credit score. Okay. That's the first thing that we can do for you. The other thing is if you go to, I just created a website not too long ago and I just launched it again. If you go to credit scores, it's plural, creditscoresandmore.com.
I'll get a banner going, Dan. I got it.
There is the first piece when you go to that website, the first, I don't know if I can pull it up here. Let me see if I can pull it up. But this is it's a great way. Well, I won't pull it up because there's probably a lot of people waiting for this. But go to creditscoresandmore.com. The first two little plugins are things you might want to look at. Okay, number one, it says free credit score. Okay, what that is actually, it takes you to credit. I think it's Credit Karma or Credit Sesame. All right. You're going to sign up for it. It's free. There's no strings attached. They're going to ask you to, sign up for the premium versions and all the bells and whistles. Don't do any of that. Just do the free version. Okay. What it does for you is it gives you a credit score. That credit score is what's called your Vantage score. There's no lender in the whole country that uses it, but at least it gives you a benchmark of where you're working for. And you'll get alerts from them all the time as you make payments on things and open up accounts and close accounts, or whatever. You'll get, hey, great job today. Your credit score went up 10 points or whatever. That's peachy. The next plugin next to it, it says, get your real credit score. So we as lenders, so lenders for your mortgage, your car, your credit card, and then your homeowner's insurance, there's a credit score for each one of those. Okay. So what do they use? Well, they all use what's called your FICO score. Okay. The second tab over is your real credit score. So you can go there, click it, and it gives you some options. You can buy the TransUnion or you can buy all three of them or whatever. But the main thing there is there's two big things there. It is truly your FICO score. So whatever that score is, that is dead on to what your credit score really is. And it's going to give you about 30 different credit scores. It's going to give you your insurance score is this. TransUnion will say your TransUnion credit score is this. Your mortgage score is this. Your this is that. So we'll know. So if you pull that, the third biggest benefit of this, it's not hard credit. It's not a hard hit to your credit. So your credit score doesn't move at all. It does cost you a little bit of money. It might be $15, $18 or something like that. But you actually now have all these scores. And then when you call us, I can say, hey, what's your TransUnion mortgage score? You can say, oh, it's a X. And now I know what I got. Okay. So there's multiple things we can help you with when it comes to your credit. So that's that piece of it. So thank you so much, Manish, for posting.
Yeah, Manish, give us a call. Especially if it's within a year, man, we can definitely help you out. We can run our what if simulator and put you on a game plan. So once you are ready to go, we're ready to go, man. We'd love to help you out. Cool. All right. Dennis, if you lock up to 180 days and had to extend because of delays, will there be a fee? Yes, sir. There will be. Dan, I'm going to let you talk real quick while I pull up some of the guidelines on that because I have it. I literally just was looking at it today.
Yeah, the bottom line is, yeah, there's a fee. What happens is the lender has to, when we lock in your rate, what happens is there's a whole bunch of money over here. And Dennis needs $200,000 to buy a house. So he calls us up and we want to lock in a rate. So what the lender does is they go out there and pull $200 from here and pull it out. And they have to pay a hedge fee on that. So what they do is they pass on, I hate to say it this way, it's built in when we lock your loan for 180 days, it's already built in. So once we have to extend it out, there's a daily fee that they charge. It's usually not exorbitant. And in this market, I wouldn't spend the 2 points or 2.5% to lock my rate in over 180 days. I would wait, even if it cost you, $500 to extend that for another 2-3 weeks. It would be much, much cheaper to do it that way than do the 270 or the 360-day lock. So basically, there is a fee. It's not crazy. And that's what I'm suggesting to people right now. So if you're closing like 190 days, we lock in the 180 and we pay a 10-day extension. Or we might even be able to get a hold of the lender that day, their lock desk. Somebody's in a good mood and they're like, we'll just give you 5 free days. It's like, sweet. Yeah. So that's that.
Yeah, definitely. Cool.
So thanks, Dennis.
All right. I understand that most lenders require 2 years of employment, but is it possible to have 2 years waived? My husband medically retired with 100% P&T, if that makes any difference. Dan? What's
and then with 100% P&T. I don't
what's
know what P&T is.
P&T?
Is it possible to have the two? Well, you don't have to work. So if you would add to this, the questions I'm going to ask you. Is he retired now and you're just living on I think it might be a pension and a trust or a savings or a retired with 100% pension. I don't know what that is, but you don't, the 2 years it's a guideline and it's like somewhat of a strict guideline, but if you qualify there's an asset depletion program, but if you're on a pension, oh yeah. So you probably get Social Security, disability, all that that income. You can qualify on that. Yes, absolutely. So if you're on Social Security, disability, a pension, a trust, things like you don't have to be working to get a mortgage. There is asset depletion programs, believe it or not. We have clients that have millions of dollars in the bank and they're just like, I just pull out money as I need to pay bills. Well, they can't technically, there's no monthly income that they earn. So we rerun them under an asset depletion program. There's bank statement programs for those that are, maybe you're a truck driver and you have a lot of expenses, but you can show you're depositing a bunch of money every day or every week. There's a whole slew of programs out there to fit, a lot of these needs. But yeah, you don't have to have a job. Another example, if you're just brand new out of college, I don't think a lot of the college kids right new out can really afford a house these days.
I don't know. Some of these young guns, Dan,
you and Brady have buddies buying properties.
Well, Brady's, I'm about to be 30. Brady, he's like 23. Some of these young guns, man, they're already making money on the stock market and stuff. It's crazy. Yeah. It's crazy. I'm like, what did I do wrong?
So in that case, if you graduated college and you just got a new job, if it's we get the offer letter plus it has to be salaried or I'll say guaranteed income. You qualify for that too. So there's a lot of things that can be, I won't say manipulated, but there's a lot of tricks to the trade that unfortunately there's a lot of data out there, and that's why I started YouTube channel, just debunking a lot of the stuff that just people think that have no relevance to them. So, but awesome question. That was a great question.
So Thank SK you. Approved VA loan, but been priced out of the market. Frustrating. Yeah. I mean, if you're talking about home prices.
Yeah. I mean, it everywhere. Is, on a daily basis, I try to, and by no means, I have a lot of people out there saying, hey, you're in the mortgage business. You're like a realtor. You're just FOMO. Guys, I don't want you to buy a house if you can't afford it. But SK, I'd like to find out more details about it because you were approved, but now priced out. So you probably couldn't find a house in that range. But there is a lot of variations when it comes to mortgage rates, believe it or not. I spoke with a person at Wells Fargo the other day, and their FHA rates are about 6.5%. So it depends on who you call. Another area that a lot of people don't even pay attention to is your insurance. I'll have people saying, hey, what you want our, we have an insurance company friend of ours who, can give you a quote, and he saved me a ton of money. And now I like Allstate. I switched from Allstate and saved $2,000 a year. So that's 150, 180 bucks a month. Just a thought.
And
So when we're working with you, Nico, he's one of the ones too. We'll ask you and say, hey, you want us to get you a quote for your insurance? You don't have to do whatever, you can do whatever you want, but it's quality insurance. It's not Joe Blow's insurance company. I mean, it's the high-end insurance at a much cheaper rate.
And also, just to add off, and I didn't mean to interrupt, is your loan officer too, if you're not putting more than 20% down, is your loan officer shopping your mortgage insurance as well, to making sure that's the lowest rate as well, to making sure your homeowner's insurance rate is low? So there's multiple options. So again, I'm not saying there are bad loan officers out there. I'm not saying who you worked with was bad, but there's a lot of options that some people don't look over that we will look over for you.
Right. Got it. I think I apologize when I was doing the P&T, I didn't know what that was. My apologies, because it looks like a lot of people did. So my bad there.
So this is April. April actually has a contract with us right now.
Get out of here.
In Texas. She's with the new build. So hi, April. I'm going to give you a call after this.
Thanks for joining us. When you guys add the questions, it makes this so much cooler, because I talk to people all day on the phone, as you can see, and Nico's texting and talking and emailing people all day long. So again, the reason we do this is to help you. That's all. And just to let you guys know how accessible we are. And I also like pulling the curtain behind so you guys can see I'm at home right now. This is my attire. I got sweatpants on. I just ate dinner. So we love doing this. And that's we're here to educate you. A lot of times here, I'll go out there and say this. I used to say it a lot, and then I kind of stopped saying it. If you are out there and you have a loan estimate, you applied with somebody, please get a second opinion. Give us at least a shot to look at your estimates. We're set up with over 130 of the biggest lenders in the country. Okay. So when you send somebody your application, or we're dealing with somebody, they have to, within 3 days of pulling your credit, they have to send you what's called a loan estimate. Please email those to me. My email is dan@therateupdate.com. Here's why. I'm going to review that. The only thing I need you to add in that email is what your credit score is. So when I get that, if it's during office hours, give me an hour. I'll get back with you and I do a video and I go through the quote you have and the quote that we can give you. There's a lot of times I'm like, God bless you. You did fantastic. Go with them, sign on the dotted line, and move forward. However, there's a lot of times where I'm like, do you realize you're paying $10,000 in fees for nothing? I can do this same thing and your fees would be $895. So I want the best deal for you guys. And if I can't beat it, I don't even expect you to go with me if I can match it. So, because I don't want you to have to go through all the headaches again. So that's how transparent we are. That's why we do this video in the evenings, so you can kind of see and see how we operate. But that's it. Okay. Sorry about that.
Oh, no, all good. Kelsey, we have been thinking it would be better to purchase a home first, then use the equity towards a down payment on land we truly want. Then build a modular home. We'll definitely email you then. Okay, cool. This is from earlier.
Kelsey, awesome. Thanks. What's happening is there's a huge move to manufactured and modular. And it is, we get more and more and more of this. One of the first people that gave me a shot on YouTube, gosh darn it, Christine, man, I apologize. She's like a modular home goddess on YouTube. And I emailed her one time and she had me on the show. I am a newbie when it comes, or I was a newbie when it comes to modular and homes and manufactured. I'm getting better and better and better by the day. I didn't believe how big of a market that was. So if you're looking for a manufactured or modular home financing and you're running into problems, call us. We're becoming experts. I won't say overnight. Over the past 2-3 months, we've really dove into this product base, and I didn't realize how big it is. Kelsey, please email me and include your phone number. And if you want, I can get you and your husband on a call one night and go over, options and things like that. So I'd be more than happy to help, or at least guide you down a path that might be able to help you. So thanks for, again, thanks for joining us.
and I got this one, but we got to give a
Good.
shout out to April again. Hi,
What's up,
April.
April?
We'll call you soon. But Dan, real quick, another one
Yeah.
from Kelsey. Is this the lady you were talking about?
She's the one we just answered.
No, I know, but it's Christina.
Oh, yes. Christine, yes. She was, and I'll be transparent here. I just tell the truth. Unfortunately, I tell it as is. It was an awkward YouTube video, me and her. I'm always you can see I'm kind of the alpha thing. And I was trying to sit in the back seat, and it's hard for me to keep my mouth shut. And I'll be honest with you, it was a weird YouTube video. It was newer to me because it was one of the first YouTube lives I've done. But the doors that opened because of her, I can't thank her enough. So if you know her or you deal with her or whatever, please say that Dan said thanks, because I emailed her a huge email not too long ago just thanking her again. But I try to do this as a YouTube family. The next few weeks, we will be having realtors from all over the country on here that have called in, or they're YouTubers, and they reached out, and we're going to do some collaborations. They're all over the country, because really what I want to do is debunk a lot of the people out there that is just saying the world is burning down. Like I said one other time, some of the markets are way overheated. I'm from Fallsby, West Virginia. There's no bubble there. Okay. So you have to take everything with a grain of salt. So I usually, with YouTubers, I'll call them up just to see we're on the same page. Most of these YouTubers and realtors, they're fantastic people. And that's what I'm trying to get a group there. So we get you guys calling in for, you're looking to buy a house. We can help you with everything. We can say, okay, let's help you with your financing. We got so-and-so. He's a YouTuber also, that out in Southern California or Atlanta or Florida, whatever. You want to work with those. They're great people, and we'll just keep it in the YouTube family. So that's that work.
Cool.
Next one.
Let me pull it up.
Good. Thanks, Kelsey.
All right. Is it better to lock rates before 30 days closing, or 6 months in advance? I signed for a new construction and I'm closing in September. Okay, well, so here's the thing. I will tell you, when you are locking in a rate for 90 days, it is going to be a little bit higher than if your closing was in the next 30 days. But where are rates going to be in 6 months? They could potentially be in 6%, 6.5%. And so if we can get you into a 5% rate right now for 6 months, and let's say rates do come down before your closing date, we'll be able to get you the same new rate. So again, in most cases, yes, the 30-day rate is going to be a lot better than the 6 months. Right, Dan?
Yeah. So here's how rate, let me make sure I read it. Is it better to lock the rate before 30 days closing or 6 months in advance? So let me just put this in perspective. If we were talking back in last November, and you asked that question and you waited, you would have went from 2.99 to 5.5. Okay. But how locks work is they go in basically kind of 30-day increments. So a 30-day rate lock means you have to get underwritten, closed, and funded within 30 days. That's a great rate. Remember when I was saying, what happens when we lock in your loan, there's a pool of money out here. We go out and we grab that money and we pull it down. We have to pay daily interest on that money. Okay, not we, but the lender. So what happens is, the longer the duration of time that you need that lock, the more it's going to cost you. It's either going to cost you in real dollars, or it's going to cost you in a higher rate. And in most cases, I mean, when we get our raw rate sheets, they're like 8 pages long. I mean, if I showed you a rate sheet, you'd be like, you're kidding me. Everything's automated now, but basically that's how it works. So every you can lock a rate at 30-day. Let's say the 30-day rate's 5. Well, let's say the 60-day rate is 5 1/8, and the 90-day rate's 5 1/4, and then the 120-day rate is 5 1/2. You understand what I'm saying? So, but what you got to balance that against what's going to happen with rates. So again, if we were talking back in November, I have a gentleman we just closed. I got several more coming. They're all closing in like the low 3s. And because they called in back when, and they thank us daily. I'm just telling you as it is. So hopefully that makes that works for you. So,
Right. I was trying to answer Kelsey on the side, or at least ask her one little more question. But her question was, if you want to lock the rate for longer, when do you pay the fees? Depends, Kelsey. So do you mean for a 6-month rate or longer than a 6-month rate? Because for a 6-month rate lock, there's no cost associated. Only time there's a cost associated is when it's over the 6 months. So if is that what you mean? Because again, right now, anyways, anything over the 6 months, Dan and
you have to pay. You have to pay up front. So what they're wanting, they want to grab you. They want you to have skin in the game, because what could happen, again, what they do is there's a pool of money. Hate to keep saying this. They're taking that money and they're pulling it down, holding it for Kelsey. Okay. So Kelsey has no skin in the game. The bank's holding it, paying these fees. They're allowing us to go to 180 days without you having any skin in the game. But after that, what they're saying is, we want a commitment from you. We've given you the commitment. We'll honor this rate for 6 months or 9 months or a year, but we want your commitment to us. And that commitment is you sending them a check for a certain amount to make sure you stay with them, because otherwise they're going to lose money if half of their rate locks don't close. Okay. So hopefully that makes sense.
Hold on, let's see. So if you were to get a better rate at 30 days,
correct.
Correct.
Yeah. But that's what we would do. We would weigh how much money you have in there. Let's say it's $1,000, but let's say we can move you. Let's say it's $2,000. All right. But at that time, we locked you in and your rate's $599. Okay. Rates plummeted. Now they're $3.25 again. Well, your differential in your payment's $250. Well, in 4-8 months, within a year, you've recovered your whole cost. Would I forfeit that money to take the lower rate? Absolutely. But let's say you're going to save $50. We'll just close over here. I mean, and you're not always stuck in that loan. You don't have to stay in this loan forever. If rates go down again, refinance. 70% of the country refinance in the last 2 years. That's why I'll address why all the mortgage companies are laying off people right now, because this is one of the big questions I got. Everybody's like, see, Dan, the real estate's just crashing because look at all the mortgage companies basically laying everybody off. Guys, the reason why is nobody's refinancing anymore. So refinances the mortgage business is down over 50%, in some cases 70%, because everybody's refinanced. So all these companies that just kept adding support staff because they needed to at the time are going to now have to lay off because the volume's just not there. We're not saying, if you want to look at the housing numbers, look at the housing, the closing numbers on purchases and the sales numbers, and they're stable and up, but there's just no refinances out there, especially those that are just looking to refinance at a low rate. Doesn't really even exist anymore.
Nope. Definitely.
Is that it?
That's it right now.
All right. So if you have any more questions, please feel free to post those now. Otherwise, we will conclude it. I'll give everybody a minute or two to post any last minute things. What I've been doing lately is I've been going on to some other people's YouTube channels, especially realtors, and going down and seeing what the most common questions are asked. And almost everything is pertaining to financing. So if you're a realtor out there, or you're a YouTuber out there, or a YouTuber out there that is trying to, assist more and more people, please let me know their name, reach out to them on my behalf, see if they would like to do some collaborations and just educate more and more people. Just the whole purpose, and I'll conclude it this way. The whole purpose of this channel is to educate and inform you guys everything real estate, especially when it comes to the financing options, because so many people don't know this piece of the puzzle. And it's kind of frustrating because your house is probably going to be the biggest asset you've ever have and the biggest debt you'll ever have. So make sure when you do it, you do it with financially responsible in the most prudent way possible. So that will conclude it for today. We're just short of 1 hour. I will be posting the VA presentation on the website or on the YouTube video tomorrow down in the description below. So if you need any of that, feel free there. Down below too, we have where you can order your own credit reports. There's a whole slew of things we keep adding down there on a daily basis. So check that out. Check out our website. Make sure you subscribe to our newsletter. God, I feel like this is a commercial. And that's it. So thank you guys so much for watching. Thanks to everybody for all your comments. God bless. And I'll see you guys tomorrow morning, first thing in the morning update with Dan Frio. So until then.